The problem you've got is that for a lot of people, they forget about it, and and then when it happens, they're taken by surprise. Well, it shouldn't ever take you by surprise, should it? It should never be something that you look at it and say, I don't quite understand why it's a sticky top edge. So when we were talking about it, what was one of the biggest problems we thought was going to be the big problem for the top edges on equities? Well, we can see it's not just about the volatilities here, is it? Price of volatility is getting more expensive, but that's not unusual. We obviously would rather be bearish if it's dropping, of course. That's pretty obvious. But one of the other things that we obviously do pay very close attention to is the concept of risk premiums, is the concept, of course, of the rotational business that we see coming in. So if we look at some of the rotational business we saw coming in here, was it bullish or bearish? Well, it's been bearish for a long time, hasn't it? It's been bearish since July. Technically, it's been bearish since July. So it's not that either. Look at real yields, risk premium, sorry. And now we've just found the problem, haven't we? We've found the real problem. Risk premium is collapsing on the last rally. It never collapsed on this rally. It didn't collapse on this rally. It didn't collapse on this rally. It didn't collapse on this rally. And it didn't collapse on this rally, did it? None of those rallies had real yields, risk premiums collapsing. This rally, real yields are getting, I keep saying real yields, my mistake. Risk premium is getting murdered. And why was that the case? We told you why that was the case a few weeks ago as well. In fact, a month ago we told you why that was the case. A month ago. We told you that it was the rise in the 2-year yield was going to have what kind of effect on the back end of the curve? What did we say was going to happen to the back end of the curve? We said the back end of the curve was going to flatten. Did the back end of the curve flatten? Did the back end of the curve flatten? It didn't just flatten, did it? It got absolutely mauled to death. So with the back end of the curve getting mauled to death like this, in line with the risk premiums, I don't think anybody's going to look at that and not understand this process. It's crystal clear as far as I'm concerned. Now, it doesn't necessarily mean I'm not a buyer on occasions. Of course, I'm a buyer on occasions. There's buys almost every single day. But what I'm trying to get across to you is there is always a macro view. And I told you when this was happening, I says the one thing I will not be doing is I will not be buying the highs of the day. Ever. Is that not what we said? I will not be buying the highs of the day ever. Now, I'm not saying I'm going to be selling the highs of the days. I never told you that because each day is individually, thought of. Every day is a different kettle of fish. But what I did say with 100% certainty is I will not be the guy that buys the high of that period. Hindsight is a wonderful thing, but this isn't hindsight. This is not somebody on the talking heads on CNBC, CNN, Fox News talking about this and saying, yeah, the equity markets, I think, is going to be selling now that the equity markets have already started to sell. We told you this when the market was tapping the tops. I did a classroom on this when the market was tapping the tops. I clearly shouted out loud that we will never be a buyer of these top edges, and I don't care what anybody else is doing. I am not going to be buying top edges. I'm not going to be buying these swing highs. Well, we were right. Again. We were right about the Fed. We were right about the equities. We've been right about the oil. All of these macro stories we've been right about from 100% success rate on these macro stories. The big concession trade on bonds has been worth, told you last night in the tweets. The big concession trade that I tweeted so that it's time-stamped that you all knew about. That concession trade, guys, that we put on this chart last month We told you to concession trade this. That trade was worth $10,000 per contract if you decided to join me on that concession trade. $10,000 per contract. A little 5 lot in bonds there, guys. You just done 50 grand in a month. 50 grand. That's a nice swing. That is a very nice swing. It's amazing how these big macro storylines start to play out the way we discuss them, the way we talk about them in this room. And you can see the difference between what we see versus what the talking heads see on the news. They always look back at these things when they've already happened and start telling you about what just happened, whereas we're telling you about what we think is going to happen next. And we're not too far wrong, are we? We are not too far wrong at all here. It just shows you guys, when you learn this stuff, it's unbelievably powerful if, and that's the big if, you put it into action. When you learn about the bond auctions, it's incredibly valuable if you put it into action. Short term doesn't mean the macro necessarily changes. Sometimes it does. A big change in the short term value can change the macro picture. Of course it can. But we should always remember that the short term operates inside the macro, not outside the macro.